Let's talk about the difference between institutional levels and retail levels, because this is where most traders get confused, and it's also where the market shows its true intentions. Now, with the help of AI, this separation becomes so much clearer. Retail levels are the ones everybody sees. The obvious support, the obvious resistance, the round numbers, the clean, perfect trend line. These levels work sometimes, but they also fail dramatically, and they fail because they're crowded. When too many traders enter or exit at the same level, that area becomes fuel for bigger players to use against them. Institutional levels are different. They aren't obvious. They often sit just slightly above or slightly below the zones retail traders are relying on. This is where stop losses are hidden, where trapped orders are waiting to be triggered, where imbalances must be filled, and where liquidity sits untouched. Institutions don't really care about the level that looks perfect on a chart. They care about the area that holds the money. AI makes this distinction incredibly easy to see. When I analyze a chart and the AI highlights these liquidity clusters, it becomes immediately obvious which levels are real and which levels are just retail illusions. We've seen this play out many times in our own analyses. With Bitcoin, for example, everyone was watching 72 and 75,000 as these major breakout zones. But the liquidity wasn't actually there. The real institutional interest was sitting below 70,000 and above 76. Those were the institutional levels, not the ones being discussed everywhere online. The same thing happened with INJ. The chart looked like it was forming this clean, beautiful support, but the AI highlighted a huge pool of liquidity just a little bit lower. And that's exactly where the price went, not because the structure broke, but because the market needed that liquidity to fill its orders. Dow gave us another clear example. Retail traders saw volatility and panic. But when we looked at the liquidity, the story completely changed. The market wasn't collapsing. It was collecting the fuel it needed for its next big move. So here's how I approach the market now. Retail levels tell me where people are emotional. Institutional levels tell me where the money is. And AI helps me separate the two. Once you start looking at charts this way, you stop reacting to all the noise and you start understanding the market's true intention. The market doesn't move randomly. It moves where liquidity sits, and institutions always know where that is. If you're enjoying this experiment and want to see how AI continues to break down the market with me, feel free to subscribe. There are no signals, no hype, just a transparent look at how I combine human intuition with AI to understand the market. Thanks for watching.